Hey guys, it's Nick, and in this video I'm going to talk about the latest in GameStop and what's going on with this coordinated effort to try to shut down all the people that are long this stock. And it seems like it's coming from the big hedge funds that are pushing for this through the brokerages. There's some really crazy stuff going on. They tried to shut down Wall Street bets last night. Now it's back up supposedly, and the membership is growing like crazy, and the hedge funds are really scared, and they should be, as I'll show you in a little bit. And it's gotten to the point where these brokerages are not letting people transact in GameStop to buy it, only to sell it if you own it. And there's even some talk, somebody posted something from Robinhood saying that Robinhood is liquidating their longs without their permission. So this is getting really crazy, and whether or not you are in GameStop or in any of these shorted stocks should not make a difference to pay attention of what's going on here to see what these markets really are like, and that you see it's very much like a casino. As long as you're losing or making a little bit of money, they're okay with that. Once you start winning and it's coming out of somebody else's pockets, the hedge funds' pockets, they have a big problem with that. So I don't know if you know, but in the casinos, when you win, they give you some perks. They give you free drinks, or maybe a hotel room, maybe a free plane ride, as long as you keep coming back to lose. But if you keep winning and winning big, you know what they give you? They give you nothing. They show you the door and tell you you're banned from playing here. We don't want your business. And so that's what it's looking a lot like on Wall Street right now with these brokerages who get the majority of their money from these hedge funds that pay them for order flow. And so now the hedge funds are losing money, and they're turning the screws to the brokerages and trying to shut down people from buying these stocks. I mean, how crazy is this? This is huge manipulation on the hedge funds if this is true. So here's a chart of GameStop today, and it opened and went lower before it jumped to almost $468 and then dropped to like $112. This is, I guess, the time when all of these brokerages started either limiting people's ability to buy, outright stopping people from buying GameStop, or actually liquidating people's longs without their permission. Now, just to be clear, now brokerages sometimes restrict trading on stocks based on too much volatility because of the risk to the actual brokerage. And that's nothing new. And so normally you might have 50% margin, meaning with $1,000 you can buy $2,000 worth of stock. When a stock gets really volatile, a lot of brokers might take away the margin and say, with $1,000 you can only buy $1,000 worth of stock, and that's their right to do that. But when they start saying no matter how much money you have, you cannot buy this stock, or the stock that you have already bought with cash, not on margin, we're going to force you to sell it. That is something that's really wrong, and no matter whether you're a buyer of these shorted stocks or not, you should have a problem with that. So this started last night after the close. Wall Street Bets was shut down to anybody that didn't get an invitation to get in there. And this is a chart of the number of Wall Street Bet members. And you see January 21, they were under 2 million, and just in the last few days they've been jumping up like crazy. Millions of people are trying to get in this thing, which is really worrying the hedge funds that are short GameStop and these other stocks. And one of the first ways that they try to shut down or pour cold water on people buying GameStop and these other stocks is Discord shutting down the server for Wall Street Bets by saying the typical hateful and discriminatory content after repeated warnings. So if you want to shut down some kind of group, all you have to do is go post something bad and then point to it and say, you see, and they will shut it down. And so who is behind this? Here on Zero Hedge, it says, one wonders which hedge fund, Citadel or Point 72, made a quick call to the Discord board to make sure these massive short ramps cease. And so here's some articles. GameStop and AMC trading now restricted by TD Ameritrade and Schwab. Trading apps are responding to the GameStop fustercluck. And so look at this article by Bloomberg. Hedge fund titans lose billions to Reddit traders running amok. Now, where does Bloomberg get its money? Not from Bloomberg News. That's a losing business, I believe. They get their money from renting Bloomberg terminals to these same hedge fund titans that are losing billions to these traders running amok. So it's a very slanted article to try to, shame or slander the people on Reddit that are actually making money this time. And in this article, they talk about how much people have lost. Cohen's Point 72 asset management declined 10 to 15% so far this month. Okay, while Sondheim's D1 Capital is down about 20%, Melvin Capital down 30%, and also Maplelane Capital is down 33%. And so who are some of these people? I'm going to look into it right now, and you'll be surprised how interconnected they are to all of this. So let's start with the first one. Melvin Capital was the first one to publicly show how much they lost and that they needed a bailout from Citadel and Steve Cohen from Point 72. And they gave them $2.75 billion. But that was for the margin call when GameStop was about $100 or so. GameStop has since gone to $468. So how much more are they losing on that? Even though they said they covered, why are they having this coordinated effort to shut traders out from buying GameStop? Maybe they didn't cover, or maybe it's even more interconnected, as I'll show. And just so you know, the person who started Melvin Capital used to trade at Steve Cohen's SAC Capital back when it was in operation. More on that later. The second hedge fund to lose a lot of money was Maplelane Capital, established in 2010 by former PM at the disgraced tech-focused hedge fund Galleon. And if you don't remember that, let's go have a look. Do you remember this guy, Raj Rajaratnam from Galleon Hedge Fund? If you don't, go watch CNBC, because they actually have a show about him on American Greed and how he was doing insider trading. And so Leon Shalov was the senior portfolio manager at Galleon, and he left there after the arrests and the conviction and started Maplelane Capital. Now, that doesn't mean he's guilty of anything or anything like that, but for these people to make all these accusations against manipulation by Reddit traders is ridiculous. And, that's kind of the pot calling the kettle black, considering some of the places that these people came from. So that's Maplelane. Now let's go look at Steve Cohen. This is Steve Cohen right here, and he used to run the SAC hedge fund, which is his initials, Stephen A. Cohen. And he started in 1992, and at his height, he had, 16 billion under management, and he had a really high take rate. He charged 3% of assets and a 50% fee on profits. And yet he was still a really hot hedge fund. He was making really good returns for his investors until he got charged by the SEC for insider trading. And so all you have to do is look at their wiki page. In 2010, SEC opened an insider trading investigation. And in 2013, several former employees were indicted by the U.S. And in November 2013, the firm itself pleaded guilty to insider trading charges and paid $1.2 billion in penalties, in addition to the $616 million already paid to the SEC. Although no former charges have been filed against Cohen himself. The firm shrunk after returning the vast majority of its outside investor capital, and Point 72 Asset Management was established as a separate family office in 2014. So basically, the standard operating procedure. if you're big enough, you can do all kinds of illegal stuff and then pay a fine, not admit any wrongdoing, and then continue on. But of note is that Point 72 is now supposedly all his own money. So that 10-15% he just lost in this month is his money, not investors' money. So along with Steve Cohen's $750 million to bail out Melvin Capital, Citadel also added $2 billion to that. And like I said, that was a few days ago. GameStop is up a lot since that bailout. And so Melvin is probably bankrupt by now if they didn't cover like they said that they did the other day. I don't know if they did. I don't know if they didn't. But if they did, why are they so anxious to shut down all trading in GameStop? And so curiously enough, the most aggressive broker to try to shut down GameStop, it seems, is Robinhood, who is supposed to steal from the rich and give to the poor. And it seems they are doing the exact opposite. And so why is Robinhood so eager to shut down GameStop? Well, because Citadel is its biggest source of revenue, okay? In their payment for order flow. When Robinhood doesn't charge you any commission, it's because they're getting money from Citadel for sending them orders so that Citadel can trade against them and get information about the market and retail traders. And about that, Melvin Capital covering their shorts, yeah, let's see. CNBC's David Faber earlier today noted that Melvin Capital is, quote, is in trouble after suffering massive losses, and the infusion from Citadel and Point 72 is probably gone. Wait, I thought they covered yesterday or whatever and they were okay. So what happened? Were they lying about it? So if the squeeze continued, Citadel and Point 72 would have to bail out Melvin again. And while the 2.75 may be okay for Steve and Ken Griffin, if they had to do $5 billion or more, then it starts to look like real money, right? But not only that, like I said in my video yesterday about the Goldman Sachs hedge fund VIP ETF, GVIP, it is trading the opposite of the most shorted stocks. So as the most shorted stocks go up, the hedge funds have to sell their good stocks to cover their margin calls. So Stevie Cohen in Point 72 had a lot of the stocks in the GVIP is a lot of the stocks in his Point 72 hedge fund. So had this short squeeze continued, not only would he lose money on the Melvin Capital investment and maybe have to bail out more, but the stocks in the GVIP ETF would be going down and causing him a lot of losses in his long stocks in his fund. And so, as Faber also said earlier, any number of large hedge funds have suffered significantly, and according to financial data analytics firm Ortex, short sellers, mostly hedge funds, are sitting on estimated losses of $70 billion from their short positions in U.S. companies just in 2021 alone. And the Ortex data showed that as of Wednesday, there were loss-making short positions on more than 5,000 U.S. firms. This means that virtually every hedge fund had short positions that were getting hammered. So when dozens of these asset managements sat down and decided to politely call one broker after another, what do you think happened? That's right, Joe Sixpack was sold down the river. And I don't know if this is true, but while unconfirmed, there's speculation that Citadel reloaded their shorts before they told Robinhood to stop trading GME, as the source notes. If true, the people behind this should be in jail. And just to show you how blatant they are against small investors, the CEO of NASDAQ, Adena Friedman, suggested a halt to trading to allow big investors to so-called recalibrate their position to combat Reddit users. Can you believe that? So big investors are losing money to Reddit users, so let's shut everything down to get them to recalibrate and let these stocks go down so they can cover some of their losses. How crazy is this? So with all of these hedge funds short and potentially having to liquidate their actual good longs, that could have a cascading effect not only on the hedge funds but on the stock market in general, and it could lead to another long-term capital management type situation that I said in my video yesterday. And the other thing is this, these hedge funds and other investors are sharks, and when sharks smell blood in the water, they turn the screws. Okay, so if they know that Steve Cohen is long all these stocks in the Goldman GVIP ETF, and that he's having to bail out Melvin and his own stocks that are long are going down, they're going to short those good long stocks to really turn the screws so that he sells at lower and lower prices and has to liquidate himself. So that's the kind of thing that goes on Wall Street. And on the flip side, you see the rumor that Citadel, before they, I'm not saying they did, but before somebody put in this coordinated effort to shut down all trading in Gamestop and other stocks like this, they're saying that Citadel reloaded their shorts right before Robinhood made their traders stop trading, and even in some cases possibly liquidating people's positions without their permission. Guys, there's nothing new on Wall Street. You know what? This has been going on forever, even in the bucket shops. And if you don't know what a bucket shop is, it was like a shop that just had the prices of a stock, say IBM. They had a feed to the New York Stock Exchange, and they would watch the prices and they would mark it down on a board, and people who didn't have a lot of money could come in and say, give me 100 shares of IBM at $100. And you give them $100 and you got a 1 point swing. If it goes down $1 on your 100 shares, you're wiped out. But if it goes up, you make money. And what they would do is, the bucket shops, if they had too many people betting on one side, let's say everybody was long IBM and this thing was going up, the bucket shop is losing money, they would call their friends on the New York Stock Exchange and pay them to run IBM down to the point where they liquidate those people's longs in the bucket shop and take their money. So that was 100 years ago. And this is the newer, improved version of it. And I remember in the late 1990s, Stitadel Securities, the maker of the Island ECN, had its own brokerage. It was the first brokerages that had streaming quotes at the time. And they were really fast, and they were $10 a trade. And they would do a similar thing. I remember buying some hot internet stock on Friday that was going to pop on Monday. And on Monday came and it popped pre-market 70, 100%. And when you try to place your order to sell, what would happen? It would just tie up and you would get the hourglass or whatever, and you would try to cancel your order and you couldn't do it. And you would try to place another limit order lower because the stock was going down because they were smacking it down. And what would happen is an hour later, after the stock is already down and back up, you get a confirmation saying, oh yeah, you sold your stock at the bottom miraculously, and now the stock is back up and everything is fine. So this game has been going on for a long time, and you see the brokerages for the last few days have been having problems with outages, supposedly. Are those real outages or are those faked outages? I have no idea, but all of this stuff is very suspicious. I can't believe I'm saying this, but I'm actually in agreement with what AOC and Ja Rule are saying on this. And the people who have the class action suit against Robinhood, I hope they get their day in court. And I hope, they're forced to stop this kind of thing, because if what they're saying is true about these hedge funds coercing these brokerages to stop people from trading and actually liquidating their stocks without them approving of it, that's blatant manipulation. A bunch of people buying a stock because they're in a chat room and they're all in agreement is not manipulation. That's what makes a market, right? When the hedge funds have their hedge fund dinners and all talk about investment ideas and they all pile into those ideas, That's not that's not manipulation, but when Redditors do it, it is somehow. So guys, the lesson here is that the brokerages aren't your friend, and you should have multiple brokerages just in case one or two of them try to pull something like this. You can get out of your position in the other brokerage or something like that. Always have options, because you never know what's going to happen. So I hope you liked this video. If you did, give me a thumbs up. And for every thumbs up you give me, Gamestop will go up $1. So hit that like button, guys, if you want to continue the Gamestop squeeze. Thanks for watching, guys. I'll see you in the next one.